All right, we told you Chewy earnings are out, and the stock continues to jump higher, better than 20% in overtime after beating on earnings and revenue. Let's bring in Chewy CEO Sumit Singh for more on that quarter. It's good to see you. Welcome to Overtime.
Hi, Scott. Good to be here.
What do you think the market's focused on? The fact that you reported a profit when expectations were for a loss?
Well, I think generally, look, I think the team executed really well through the quarter, right? And I think the results reflect the resilience in the pet category. And it also reflects our ability to execute through that, through macro environment and deliver results to our stated objectives. And the fact that we grew top line by 14% and delivered incremental profitability, really great sequential momentum. I think we're getting rewarded for good execution here.
Yep. If you don't say so yourself. I did notice that you are suffering a few of the issues that some of the other retailers that have reported are dealing with. Shipping and labor costs are higher. Your margins fell slightly. And I'm wondering how that dynamic is going to play out, do you think, in the months and quarters ahead, if it's still going to be an issue?
Yeah, I think there's a lot left to play in the year, Scott. But when we came into the year, if you recall our April earnings call, we essentially are coming in with a headwind of roughly 100 to 150 basis points as a result of incremental freight, in which our fuel estimates are actually baked in. And so, given that we've played the quarter, given our ability to be able to pass pricing through and, drive healthy gross margins on the back of product margins, and also the fact that we're driving logistics and supply chain initiatives inside the company that are actually providing the leverage that you see here, it's what it tells you is that we have the ability to shape, and steer through the current macro environment to be able to deliver the results. Now, it's obviously what needs to be seen here is how much inflation is still left in the system. How would inputs like fuel or product cost inflation kind of flow through the rest of the year? But, we're prepared to kind of handle both the pluses and the minuses as they come along. And we're bullish about the future.
I'm looking at the active customers that you have, 20.6 million. It's the same number that you had when you last reported. How about growing some more of your subscribers?
Yeah, it's a great question. Look, when you look at it from a year-over-year perspective, right, we grew active ads by roughly 800,000 customers, or just over 4%. And when you combine that with the fact that share of wallet, which actually is a really important input metric that drives our revenue. So when you look at Chewy, it's the active ads that we bring onto the platform and then the spend per that customer. That spend per customer grew 15%. And so it tells you two things. One, we're still acquiring customers at a really healthy clip. And B, customers who we are engaging with or customers who are engaging with the platform are incrementally spending really healthy sums to be able to grow net sales per active customer by roughly $58 on a year-over-year basis. And I think what we will see in 2022 is this kind of ebb and flow as the consumer mindset reacts to inflationary pressures, as consumers start kind of traveling, and spending their dollars on restaurants or travel, as the economy reopens back up and some of the consumers flow back into retail. But look, on the back of that, e-com continues to grow, right? When you look at Q1, let me give you 2 data points. Actually 3, because I'm going to throw Chewy next to it. US retail sales grew about 11% in Q1. E-com sales grew at 6.5%, and Chewy grew 14%. So not only are we growing, on top of the strong e-com growth in Q1, we're actually taking share both in pet and overall e-com. And that's actually a great place to be.
Yeah, I'm looking at your shareholder letter, and real quick, the prior quarter you cited, quote, fundamentally strong consumer demand. I read the latest one, and I read it quickly. To be totally honest with you, I didn't see such strong language this time about the consumer demand that you noted last time. Am I reading too much into that? Can you speak to what you think is the strength of the consumer right now when there are so many questions about it?
Yeah, you may not have seen that in the preview comment here, but you'll definitely hear it on the earnings call that we're about to get into. But underlying trends haven't changed as we played the quarter sequentially. We still are underpinned by strong fundamental consumer demand and resiliency, particularly driven in non-discretionary categories such as consumables and healthcare, which were further boosted by strong pricing that flowed through the quarter. And any pullback that we're seeing is very consistent with the rest of the industry in discretionary purchases such as hard goods, et cetera. And I think, up until the macro environment stabilizes, we should expect to see, similar trends. At least in pet, we should expect to see a similar momentum and similar trends flow through the rest of the year.